Good morning, everybody. It's Chris here from Serene Education with the 4 majors analysis update for the 22nd of February 2012. Hi guys, just going to go over quickly the 4 majors on my larger time frames, weekly, daily, the 4-hour and hourly charts. I've stuck to the larger ones primarily because it gets rid of all the indecision that we're seeing on the smaller time frames. For those of you who still like trading your 5 and 15 and 30 minute charts, by all means, I'm not saying you shouldn't. It's just that I don't myself particularly like trading a lot of volatility, where a lot of that volatility isn't genuine volatility. You probably know what I'm talking about. But anyway, weekly, you can quite clearly see we had a good start to the week. We are progressing high. We've opened higher, well, slightly lower than the close on Friday, but we are moving to these highs here, the wick highs. Just one thing to note, you'll notice this 20-period moving average has been a prior resistance on this pair before. So ideally we want to be trading above that. In this case, it looks like if we can get the weekly chart to close above this 13,300 mark, I think it is, then it should bode well, because it is quite clearly, or has been, twice now, 2 consecutive weeks now of indecision or resistance at that level. Okay, so both those candles being spinning tops. And as I mentioned, we want to see a clear decision candle after indecision, and then we'll trade that decision. Okay, that indecision is also coming to the underside of this prior support here back in November of last. So it does. There seems to be a lot of resistance above that it needs to get above in order to still look pretty well long term. So we have got a heads up arrow here. However, the overall trend for this pair is still very negative, and so by that it still needs to do a hell of a lot of convincing in order to be bullish. Okay, trend line, if you look at it, just the last previous swing from the highs going into it probably a couple of weeks from now, but it's close, in close proximity, so got to get above the 20-period moving average, and if we do see a nice bullish engulfing above this, will clearly take us above prior resistance here, support and resistance recently, and we can kick on higher to the upside. So looking at the daily now, let's have a look at the daily. Excuse all the lines, but I like these fib retracement figures. You can quite clearly see a lot. You suddenly see bits of blue poking through now after a lot of downside movement. From our highs, you can quite clearly see all the way back here. You can either choose on the daily to take it from your highs, and the more touches, the stronger the confirmation of that trend. So in this case, the downtrend has now been breached, and now we're seeing a positive up move, because we'll take this out of consideration because it is just a spike. Okay, it's clearly a spike, really catching people. But you want to go for the more touches. But you can see that we have seen a bounce higher. However, we are consolidating at a price support area. Noticeably at 300, as I mentioned, this happens to be some sort of resistance level, or prior support and resistance level at figure. I've just gone for 13,300. It's a round number. The more touches, the more confirmation. Okay, you can take that down to here if you so choose to. It's entirely your choice. I've gone with 300 because it's thereabouts, and price has pulled back noticeably at those areas. Okay, so 13,300. You can quickly see in the daily. We are yesterday's candle very indecisive at that ceiling level. Okay, quite clearly. We saw price moving higher, and then we saw an indecision followed by a spinning top, followed by a bearish engulfing, and there was some money to be made to the downside. Back to 38.2 fib retracement from this upside move. Then we saw a nice hammer engulfing, bounce on 38, and we saw price moving higher. That would have been your first target to the upside. Now we're trading into this consolidated range of this resistance level here, and we got a spinning top, a doji yesterday, or spinning top. We want to see a decision candle. Will we see a further resistance forming here with price falling lower as we did before, or are we going to see a nice bullish engulfing to the upside of 13,300, breaking that resistance now, finding support over the next couple of days, and then bouncing to the upside? It's got to remain. So you can either trade. Just be aware that the trading range over here might be very, very, very hesitant as we're trading into this resistance level, ceiling level, prior one. We need to see one or two things. It's got to be trading higher than 13,300 going into the US session to see any more upside movement progress, or if it's trading below in this case below the 38.2 from here down to here, then we're probably potentially looking at price just to consolidate here with an outlook potentially of a pullback to occur. So just keep that in mind when you're looking at your tradings. The 4 hour, quite clearly we are bullish upside. We've seen that. However, you can see we've run into a bit of consolidation now at the top end as we trade into these highs. 1300 in particular is the long-term support and resistance level that I mentioned to you on our daily, and we're at the level now. So we're going to see a consolidation. If price can actually stay true and keep to those levels to the upside, then we could potentially see, if I take from the low here to this high, because you can see price has pulled back since then, take the low to the high, as long as 23.6 intraday happens to remain as support, then we could see a reattempt at 13,300 quite soon. If we fail to see 23.6 holding up as a support and we break lower, then we should be looking at ideally at 38.2, which will take us back to 1500, 50, 61, and to the downside again. Okay, so it's important that 23.6 acts as support intraday to start with. Failure of that would just confirm that we should be looking for further bearish sentiment to the downside to take place. And then on our hourly, oops, by me doing that, I've just put everything all over the place. Hourly, you can quite clearly see at 23.6 acting as a nice support over the past couple of days. As long as she remains above that, then there's more likelihood of price bouncing higher. Institution is below the price, which is very important. The RSI is above 50, which is great. We are seeing RSI, however, dipping each time price has been attempting those highs. That's bound to happen because 13,300 we know is a very strong resistance level. It's just clearly just telling us what we expect to see from price. What we do want to see now, price is remaining above the 50 line on RSI to confirm that price is still bullish to the upside, but we want to see a genuine break higher. If we don't see a nice bullish engulfing and breaking of 13,300 quite soon, then what we could see is price just moving consolidative against along the 23.6, and if we get a bearish engulfing to the downside, then it's telling us that RSI should be picking below 50, and if we're getting those things and it's trading below the institutional moving average, then it's telling that price is looking favorable for bearish sentiment long term to the downside. Okay, so I'll see how you piece it all together. Longer stays above 20.6 and the institutional moving average, then there's more likelihood of us testing 13,300 quite soon. If it doesn't, and we see a bearish engulfing and it closes lower than the institutional moving average on our 1 hour, then it's telling that market sentiment is really dried up to the upside, and we're starting to see a lot more shorting contracts being bought or sold, and we should see a pullback over the next couple of weeks. Next up is sterling. Weekly, just moving sideways like its euro counterpart, just moving sideways tentatively. We had a shooting star here after upside movement, bit of a bearish candle, and then we had a hammer support being found at this area here. Price not moving any lower through there. Yes, we had a long spike through, but the body's candle closing high above the 20 period moving average, so that connects as a support area intraday at 15,700. Price has got to be breaking through that negatively to the downside to see any consolidation further to the downside. You'll notice that if I go to the daily count, you can see the reason why sterling has come unstuck at this level here, because the institution moving average in the past has actually done exactly the same thing that's happened recently. It's got in the way. Tweezer top here at resistance, and price has fallen lower. Then we went into a morning star formation at 38% retracement of this initial upside moving. A nice bearish followed by indecision, followed by a bullish engulfing, a nice morning star, and prices moved higher. However, we're still capped by the institution moving average at 5,900. It's got to be trading above 5,900 and above the institution moving average on our daily to be classified as long-term bullish. Okay, once we do get that, then we could potentially look at this as our first with the pullback and the extension higher, and then you can plot your potential target to the upside of that. Ideally, if we break above the institution moving average on our daily or 5,900, then we should be looking at 100% of this initial move as our target on our long term. So you can see we're looking well above 1,600 if that's the case. However, we've got to do the first thing, and that's get above 5,900 or above the institution in this case on our daily. You can quite clearly see yesterday's candle very bearish indeed, pulling price down, so taking away these 2 days of upside movement, more price action in the bottom of the wicks, confirming that yes, price was moving higher. However, there are more selling contracts as we head into this resistance level. And sure enough, we had a bearish engulfing, and now we should be looking for price to pull back. Okay, for this to remain positive, we should see 23.6. Now I'm taking from the low here to the high. 23.6, that's going to be our pullback point. Fails at 23.6 today, holding that momentum of 23.6 and closing lower, then we should be looking at 38.2 intraday as a potential first target, back to a prior swing. Okay, break of that, then we should be looking at 50, which brings us back down to 15,600, the 50 period moving average. Break of that takes us 61.8, and a failure all the way right down to here. Here's our 4-hour chart. Quite clearly see price moving, not making those highs previously. 5,900 is the all-time high, as you quite clearly see there. I've just taken a fib retracement figure of the low to the high, and sure enough the 23.6 is in play. The last couple hours, we're talking here, so what's that, 8, 12, 16, the last 20 hours or so we've been sitting above the 50 and the 23.6. The longer it finds support here, then we're more likely to see it bounce higher. Institution moving average is below price on the 4-hour. Okay, if we get a break below this 1575 and close low on an hourly in particular, closing lower bearish, nice bearish engulfing, then ultimately we should be looking at 1565 back to the institution moving average, which happens to be our 38.2 fib retracement of this upside move on our 4-hour as our next potential target. Break of that down to 50, 61, and all the way back down to 0. Hourly, notice the institution moving average now acting as, oh, apologies. Okay, but I had a weekly there. You can see now in the hourly, as prices moved lower over the past couple of days, RSI is trading well below the 50 now. It's bounced back, found resistance, it's moved low in the last hour or so, but the institution moving average is still there. Okay, we are trading below. However, the institution moving average is still there, helping this to the upside. We have to see a break of the institution moving average, which would take us below 50, and then we should be looking at 61.8 and ultimately back down to 100 as our first potential target intraday on the hourly. Okay, so it's trading below the 50 on the RSI. It's now finding resistance, okay, quite clearly before on the underside. Before it was trading above, we were bullish. Trading above the institution moving, above all the moving averages, should have been looking for long. CTC also confirmed that overall. Yes, we had a red, but we were trading, you wouldn't be looking at any shorts here because we were trading an upside trend. Down, same thing over here. We're going negative now. We're trading below the 50 period moving average. If we find resistance down the next hour and it punches through 1576 or the institution moving average here, then we should be looking for ultimately intraday shorting opportunities to arise. US dollar Swiss franc weekly consolidative. Price is slowly starting to test those lows at 9100. I did a trade just the other day, quick sneaky one on that one, and I was able to trade. I'll show you. Yeah, shooting star at resistance, look for price to pull lower, closed lower, and then I traded to the downside back to 9100, which brings us back into this area here, as I mentioned, at this area here at 9100. There we go, that was 9100. Okay, and you can see quite clearly CTC is negative now. We've been trading below the 50 period and 20 period moving average for quite some time now. We do need to see a breach of that to see any further downside movement. If the longer it goes sideways, the more likely is price is going to continue to the upside. Got to see a breach of this area here, guys. Only then do we get, if we get a nice bearish engulfing like that on our daily to the downside, then we should be looking at potential targets to the downside. Clear one over here, for example, if you take the low, we saw back in August to the highest, the one here at 900 would be a potential target because that would be our 23.6. Another one would be here down the institution moving average, roughly around the 8650 mark, thereabouts, between 86 and 8700. It's potential target at 38.2 fib retracement, 50%. It'll take us well below the 86. We want to stay above the 86 because psychologically 86 happened to be the area where price was capped. Okay, you'll know the Swiss government actually intervened and they pegged the currency, and that's when we saw this massive upside movement. It's the same on the Euro Swiss franc. They capped it at 120, so price has to remain above 120 on the Euro Swiss franc. It has to remain above 86.86 on the US dollar Swiss franc to still be considered bullish because the Swiss government wants it above that. It closes below 86, then we should see 120 on the Euro Swiss franc being breached, and then we should probably potentially look at intervention from the Swiss government being a reality. So Before then, even before we can get to those areas, we need to see a break of this very strong one over here at 9100. Okay, we see a break of 9100, then a bearish engulfing, then we're seeing market sentiment still favoring shorts. Okay, prices move sideways. As I mentioned, the longer we move sideways along here as support, we could see potentially two things happening. A bounce higher, because it's found a nice juicy support now. Building on that support, we could see a bounce to the upside. To cancel this very strong support, we need to see a breach to the downside. So we have to see a bearish engulfing on our daily or 4 hour. Something with a lot of momentum to the downside. Okay, it's got to be a nice juicy down candle confirming that bearishness is generally in favor of further shorts, and then we act on it. Not a 15-minute break, another 30-minute. We want to see a clear direction from the market, because otherwise, if you trade those small time frames, you end up being chewed up by these little wicky things here. Okay, hence the beauty of trading bigger time frames. 4 hour will show you that. Okay, there we go. If you take these lows here, you can quite clearly see a lot of wickiness at the bottom here. If you were trading breakouts, you would have gone, it's broken through on a 91.10 on a 55-minute chart. Let me go short. No, not necessarily. Okay, so very, very important. We want to see a bearish engulfing. These have been testing the underside. Look at this one over here, for example, testing the underside, but not closing lower. It's got to be a nice bearish engulfing. No hesitation, no wicks. It's got to be a clear decision. Okay, the more clearer, decisive it is, the more likely is we're going to see a run in that direction. The moment you see a long wick with a long trading range, however you have long wicks on either side, it's just indecisive. It's just very indecisive. Okay, just remember that. And yeah, moving sideways on our 4 hour, and then our hourly. There we go. Trading under the institution moving average of below 50. Yes, as price is moving sideways, we want to see RSI consolidating, and that's what we're seeing, price moving high again as buying contracts are being purchased at this report. Are those going to be genuine ones? Well, if that's going to be genuine, we need to see 91.7 being breached. Okay, got to be above 91.7 on this time frame to be looking at longs, because then by then hopefully the 50% line will be breached and RSI will be trading above, so we know that buying sentiment is genuine, and we should be looking for a bullish trend to the upside. Failure to do so, and a breach of 91.10 or 9100, as I mentioned, to the downside, okay, then we start looking for shorting opportunities. Last pair of the day is US dollar Japanese yen, and this was the only one who's really been giving us any movement. Moving higher, open higher last week, or this week, and just moving higher on the previous one. Look at that. Massive moves to the upside. Genuine upside movement. CTC on this weekly time frame is still negative. However, the more we trade above the institution, this 50-period moving average, which has acted as a very strong resistance level in the past, we have now breached that. We're moving higher. It's just going to start changing now. Okay, give it time. Stay above 80, and you'll find that the CTC will eventually start going blue across the board. We have two parts now. If the candle closes to the upside today, then we have two parts of our 4-part CTC in our favor. Okay, 80 was a very strong price support and resistance line. You can quite clearly see a price over a number of months just went sideways. We saw breakouts in August of last year. Now we're trading above that, so if we can maintain above these highs and find support above 80, then ultimately long term we should be looking for further extensions to the upside. Okay, very, very important. Here's on the daily, see that moving higher, breaking well above 80 now. If we can find support above 80, then we should be looking for further extensions to the upside for this pair. Found support chart. We are trading. If you look at it, fib extensions from here, from the low here to this little pullback just before the institution moving average, and a continuation to the upside. 100% was breached and we sailed straight through it. No hesitation. A slight pullback after that, but even 161 is the next point of call here at 80.50. Then we could potentially look at a potential pullback to 80, but if it remains above 80, long term that just means that it's bullish, with favorable upside to remain, because that's a very strong daily or long term support and resistance level in the past, as I mentioned. So if price can stay above this area today, then we should be looking for further extensions long term for this. Long may it last. 4 hour chart, look at this momentum. It's just been absolute pure positiveness. Up, pullback, up, pullback, up, pull. It's just been going forever. Those non-farm payroll figures that came out early Feb really put a fire under its backside, and now it's just climbed. So 80 long-term support and resistance, as I mentioned on our weekly and daily charts. Okay, As long may it stay above that, because then we could see a support being forged at the top here with a continuation likely to occur on this pair. Moving averages are evenly spaced out on our 4 hour. It's just generally just making higher highs. It's just moving with lots of every day. It's just moving. 4 hour charts. Look at that. 80, as I mentioned, slowdown. Okay, we saw prices testing and we saw a slowdown there. However, still remaining above 50. Okay. The thing to remember about 50, the RSI is, as long as it's trading above 50, it's positive long term. Okay, you can see the 50 pair moving average here acting as a beautiful support for this pair as she's been moving higher. Institution moving average also pointing in the same direction. Okay, as we go into a very strong resistance level, you want to see RSI dropping because it's confirming that there's more sentiment or shorting contracts being bought, because a lot of these buying contracts that took us up to these areas have been now been closed. Okay. But as long as it remains above 50, it's still bullish overall. Okay, it's when you start seeing the pullbacks occurring and you start seeing price just moving sideways that you're thinking, well, it's actually forging out a support now, which is quite clearly happening here. Okay, price is moving back tentatively, yes, as we hit close to 80, then it pulls back and then just moves sideways, and then RSI starts to build on that. Okay, and as we head higher to this one again, RSI is trading into the prior high here. However, it's actually higher than the previous one, so this is higher than that. Not necessarily on par, but you notice that RSI is dipped very much. Okay, so you take this to there as price moves back. That is what price needs to be trading above. Okay, then you find this price moves sideways, consolidates, doesn't break below the 50 period moving average, get a lot of indecision, a lot of spinning tops, etc. over the past number of hours yesterday, and then going into this morning Asian session open, price reattempting those highs and in doing so breaking this consolidation trend now. Okay, so suddenly the price is now favoring further attempts to the upside, and sure enough, if you're taking these two here, just looking for an entry, these highs break higher than that, is just confirming now we've reached that and we should be looking for further extensions. Okay, so now we're heading off into the distance. Okay, and as long as it maintains it and stays above 80, then we should look potentially for price to pull back. If that movement is still very much favoring topside movement, a pullback might be not even slightly. It might be very short one, less than a 23.6% pullback. Notice over here, for example, break higher, indecision. We need a decision candle. We need a nice bullish engulfing upside, saying yes, we want to be higher, we want to be trading higher, and then we'll act on that. If you're in it now, great. Just make sure that your stops are underneath here, so you're capitalizing on that. But overall, this is still moving higher, and you shouldn't be looking for anything other unless price breaks below 80 again, because then we're looking for potential. This is on a bigger time frame. This will be a piercing candle, a shooting star at resistance, or very strong resistance. It could be likely, but as long as it maintains above 80, a nice close above 80 on our daily, then it should be boding well for further extensions to the upside. That's it for today, guys. Hope you have a fantastic trading day. Please trade with manageable stops. There's a lot of volatility out there. It's not going to go away overnight. Just factor it into your trading, and just keep it simple, guys. I can't mention. Just look at support trend lines, etc., and keep your entries, etc. And those things all very simple. Okay. Until tomorrow, trade serenely.